Technicals Morning Call video for Tuesday, July the 30th, almost at the end of the month, and we did get a little bit of a red day yesterday. Not much to really talk about. Again, the markets have been extremely quiet, and I think they're waiting on, we have big non-farm payrolls coming out on Friday, and we have the FOMC meeting starting today. So I think the brakes will be put on. Most of the positioning and adjusting positions will probably be put on a back burner until we can really get some sort of an idea which way this market's going to be headed. Dow Jones down 36, Nasdaq down 14, S&P down 6, and Russell down 7. So very, very quiet. First hour and a half, a little bit of movement, and then pretty much after that we just were stagnant most of the afternoon, and a little bit of a bump on closer to the end of the day, but really, really quiet. And that's okay, and that's what, as traders, we're supposed to identify when to be more active and when not to be active. And right now, we're in the middle of the summer doldrums, and that's going to change, and it will change. We don't know exactly when, but markets will pick up again, and markets are going to either break out or start to break down and start to sell off. Now, we have today, just real quick on the econ data, as far as the FOMC meeting, which begins today. We got Case-Shiller House Price Index come in for May. That's going to be released at 9 o'clock. That'll be a market mover with the housing stocks. And then we have consumer confidence for July. That's coming out at 10 o'clock. So just kind of keep an eye on that if you're holding positions into those numbers, okay, because they are market movers. All right, so I want to get right into the charts. We have the U.S. dollar. Now, the dollar has been doing exactly what we thought it would do. Right now, we've been calling for the dollar to get some sort of support here, but one day does not make a trend, and we are basically up ever so slightly. We had literally a change of a penny, but again, it's not the penny. It's really holding into these areas and kind of consolidating for a break higher. Now, this could consolidate and break lower again, so that's why we don't want to be ahead of our analysis. We want to make sure that the dollar is stabilizing at these areas, which logically so it is. It's really a good spot to stabilize. You're right above the 200-day moving average, and we're oversold on our indicators here. So, if we could gain a little momentum and start to break higher, yes, there is some resistance here. You have your 20 and 50-day moving average, but eventually they could break out of that area and really start to gain momentum. Then I could see a decent sell-off. But until then, I think the market's just going to kind of hang around at these highs. So that's interesting. Interesting developments to show you. Now, here's what really comes into play here. And what I did was I said, let me take a look at a relationship with some of these other sectors that we've been following that really make up a lot of the rally that you need, at least for these sectors to rally with the market in general. Now, here is the industrials, the transportation sector, and here's the Dow. As you can see clearly, usually when the transports start to rally, everything else starts to follow with it. And this is not the case this time. Now, you had something here that was transport sold off, so did the Dow. Transports rallied, Dow sold off, and then caught up, and as you can see what happened here. And then pretty much here, the transport sold off a little bit, and markets rallied. So you do have a little bit of relationship change every once in a while. But this is what's concerning here, right? If you can see, transports are selling off while the Dow is really not doing much of anything. And can this be a clue that the Dow, the transports are selling off, and it's going to take everything else with it? Now, it is our leader. But yes, sometimes the transportation sector really doesn't do too much and then catches up to the other sector. So that's something that you have to be in mind. But you have to also see here, which I will show you in the chart, you have a head and shoulders pattern here. Head, left shoulder, right shoulder, and here's your neckline, right at the neckline. I'll show that to you on the other segment of the charts. But take a look at the S&P and copper. Now, copper usually leads, and we've been talking about this all year, and has not, right? Copper has sold off since February, while the markets have made new highs, and copper is not doing much of anything here. And what this is just telling me, just another bear flag, which is going to probably break. Actually did break. So you have a flagpole, flag itself, and we broke down. Here is the S&P holding at its highs, not going anywhere actually. So this is something that is concerning, and even though yes, the markets have ignored what copper has been doing, you still, to me as a technician, you really can't ignore that. You still got to keep that in the back burner. Now take a look at the semiconductors in the S&P. we're making new highs where the semiconductor is not. So that's something that's also a little bit concerning, because of the fact is you need these sectors to, you need all of these sectors as one to come in and rally, and that's when you get a healthy rally, a good market rally. Well, this hasn't been so healthy so far, at least in my eyes, and that's something that I'm going to continue to monitor. Now, again, this could be totally ignored, and the S&P can make new highs, but I would say that if this market does rally, I don't think it has much legs left. If the semiconductor sector, the bank sector, the housing market, you just can't have a rally without the transports, the Russell, and a lot of these key sectors that are going to be following suit with it. You just can't have it. If that doesn't happen, the rally usually gets fizzled out. So that's what I'm saying. Just kind of keep an eye on a lot of these sectors. And again, the thing that I look at mostly during the day is going to be really the transports, the Russell. I look to see what the VIX is doing, obviously, and the Qs and the S&P and the Dow. And I look at all five of these grouped up as one, and I look to see some intermarket divergence here during the day, and that's something that's interesting to see because it does pan out. It really does, guys. So it's something that you should be looking at. Here's the S&P and the average true range. As you know, with low volatility, our average true range starts to diminish, and that's what we have in right now. So this is why I'm put it back on here. I haven't showed this to you in quite some time because we had very low volatility here. But if you see we're at 14 now, I have draw a downtrend line. So now I'm going to be monitoring this and see if volatility starts to pick up. Because if we start to pick up and start to roll back out of this downtrend line, then I think that we get some volatility start picking up back here, and then the markets start to roll over. So that's what I'll be watching as well during the course of the next coming days and weeks. Okay, take a look at our SPY. And as you can see here, we're just hanging around here at the upper end of the range, which is bullish. I mean, there's nothing wrong with that. The only question is now which way is it going to break, and no one really knows, right? We don't know. We're overbought here. Volume has really just been anemic, and we're just hanging around here. So this is still bullish, and I think what the markets are waiting for is what's the next catalyst? What's the next thing that's going to push this market higher? Now, that could very well be the FOMC. FOMC meeting starts today. It's a 2-day meeting, so we'll see what comes out of that. Maybe this can push the markets higher, or maybe we have some negative news, some hawkish comments coming out of the Fed, which is going to start bringing this market back down again. So just keep an eye on it. The next couple of days are going to be interesting as well as non-farm payrolls. Remember, the Fed has pegged their easing with unemployment, so this is going to be a very big number coming out this week on Friday. Take a look at diamonds. Same thing. As you can see, the diamonds has done absolutely nothing in the last 2 weeks. Plus or minus down 20, up 20, up 30, down 30. So really haven't gone anywhere. But we're still in the bullish symmetry, right? We have our 20, we have our 8, our 20, our 50, and our 200 well down here. So, and we're above our long-term uptrend line from November of 2012. So just keep that in mind, guys. We are still in bullish symmetry here in the Dow itself. Now, the transports, what I did was I labeled the new head and shoulders, and this purple line will be the neckline. Here's the long-term uptrend line from November. But as you can see, we have a head, left shoulder, right shoulder. Looks valid to me, guys. Upper end of the range. Can't get any better than that. Let's see if it breaks again. Now, we've had a couple of head and shoulders. You remember, we had this one here, right? And this one here actually met its target. Now, let's see if we get this one here. And this thing starts to break. If this does break, I think it's going to help the bearish case for a market sell-off here. So we'll see. But again, patience is needed in this market. And here is the IWMs. Rolled over nicely here. We're up on a 20-day moving average. But again, still have bullish symmetry here. Nothing wrong with this at all. Just kind of consolidating at the upper end of the range. Goldman Sachs, as you can see, the banks are getting weaker. Now, Goldman, one of the leaders in the banking sector, is just literally tagged the 20-day moving average to the penny yesterday. So we'll see. Is this basically a small bull flag? Could this possibly be? Which it can be, right? You get your little flag here. And let's grab the other line. Okay, here's your bull flag with your flagpole. Now, can this break out higher? We shall see. If it just breaks down from here, then obviously it wasn't a bull flag. If it breaks back out and starts taking out the highs, then I'm going to be looking to buy some banks, and I think the markets will go with it. So this is going to be interesting developments in the next couple of days. And here is the XLF. Again, holding bullish symmetry here up above the 20-day moving average. Now, Apple followed through yesterday. 445 needed to break above it, and it did. 447. Now, again, one day does not make a trend. Let's see if we get a little more legs, get some follow through, and then really to play it safe because Apple, I really don't trust Apple. It has a lot to prove itself. As you can see here, we're just chopping around the lower end of its range from the last year and a half. So I think that Apple can follow through today, or even make a higher low from this low here, right? But stay above the 440 area. Then I'd say for a trade, you can get it. Your stops would be below this downtrend line. Okay, but let's see what Apple does in the next couple of days. Maybe setting up for a swing trade here. As of right now, it's just a day trading stock. And lastly is the Qs. And the Qs here holding up well, actually. Again, holding up well. We're above this gap area of support. And from here and here, we just have another little sideways consolidation. So let's see what happens here. But big cap tech has been a little bit weak. It's been a mixed bag, and that's not really helping the bullish case as well. So let's just keep an eye on the semiconductors, the transportation sector, even consumer discretionary. Consumer discretionary seems like it's kind of stagnant. It's been in a range for the last couple of months as well. And the consumer discretionary, when they start to move, it does get noticed. So let's keep an eye on that too. You can look at the XLY or the XRT. That'll give you clues on that sector as well. All right, guys, have a great day. Let's be patient out there. Remember, we're in the summer doldrums, and taking a couple of trades is fine, but to be fully active and fully loaded up with trades during the day when the market isn't moving is really not a smart thing to do. All right, so just let's sit tight. Let's see where this market is headed. Right now, we're in sort of like a neutral zone here, and it only takes one catalyst to push this market higher and or lower. So let's be ready for that. Have a great day. We'll speak to you tomorrow. Take care.